Hi everyone, my name's Bernard Doyle, JBWere's New Zealand Investment Strategist. Jeepers, the year gets more and more exciting, doesn't it, as we roll on. So I'll touch on three of the things that we think are important right now, but that's by no means an exclusive list. There's plenty of other things we could talk about, but given time constraints, let's focus on the big issues, trade. So markets have really started to again pay attention to the trade tension, particularly between the US and China. Trump has announced that the US will proceed with tariffs on $50 billion worth of Chinese exports in July. So this is becoming real, and it's not talk anymore. So markets, are rightly paying attention to that. And the Chinese have responded in kind and said they will reciprocate. Trump has then again responded saying, well, if you reciprocate, we go to 200 billion further goods that we will target for tariffs. So it's this escalation that has investors a little bit nervous. Look, our approach, and obviously there's a lot of uncertainty around what is the US trying to achieve, what is Trump trying to achieve, and could things get out of hand. There's always a risk of a misstep, but our approach to this has been pretty consistent. We think Trump and the Republicans, firstly, there is a genuine grievance that they would see addressed, particularly with respect to trade with China. On my recent trip there, that was a clear message. But secondly, there is a political element to this, which is the midterm elections in November, and polling is showing that there is broad electoral support for what Trump is doing. So don't expect this to die down necessarily ahead of the midterm elections in November. So I think there's a duration here. But the flip side to that is nothing we're seeing suggests that this is going to get out of hand in terms of getting to a point where it actually tips over the Chinese economy or tips over global trade. There is a rationality at work in terms of the ratcheting up of pressure. Lots of rhetoric, but if we look at what actually has been done to date, the tariffs so far have been, relatively small, and certainly in terms of the impact that they're having on growth with China, and certainly with the US is not affected at all. It's growing very strongly. So, not to downplay the trade issue, it is a big issue. It's something that is going to occupy investors' minds, but we're a long way from saying that this is going to be a threat to global growth and something that we'd want to change our portfolios around for. And as I say, I've got half an eye on those elections later in the year. I suspect post the elections we'll see, the trade dialogue become a little more measured. Second big issue is OPEC this weekend. So the oil price, obviously has come a long way in the last year or so, and getting to a pain point, getting to a level where it's starting to be noticed by consumers. So what OPEC does this weekend, OPEC plus Russia, is going to be interesting. We would be surprised if OPEC didn't increase supply. And the question is how much. There's ranges between 500,000 barrels a day to 1.5 million barrels a day, which Russia seems to be supporting. Our view, and certainly the view of some of our research providers, is it doesn't really matter at this stage of the cycle. The big story or the big driver of the oil price actually now is demand, and demand growth is very strong. So we think OPEC is playing catch up at this stage of the economic cycle, and therefore, the announcement, if it's a big announcement, if it's 1.5 million, you'll see some weakness in the oil price, but we think that'll be temporary. And likewise, on the flip side, is if the announcement's too small, you will see the oil price pop up. But broadly speaking, our view is oil prices are going to stay elevated while the world is growing in the way it is. And to my final point, I guess amongst all this noise, it is important to realise or to recognise that we've had a tough first half of the year in terms of economic data, really tough northern winter, which held back Europe and Japan. So we're actually pretty constructive on the outlook for equity markets into the second half of the year. You know, we think trade is probably getting close to peak noise. You know, the oil moves, it could go higher, but you know, it's done what it's done, and you know, probably won't double again. You know, so we think we're at this point where, you know, we're quite happy sitting with equity portfolios, and for new investors, building up exposure to equity markets in a normal manner. Look, I'll finish here given time, but you're more than happy for you, through your advisor, to flick us through, communicate any further questions you might have. Please get in touch with, as always, with your JBWere advisor. Thanks everyone. We'll be online with another market update soon.